Warren Buffett got $29 billion extra because of the Trump tax cuts, and he's sitting on a $116 billion cash pile. Now, he's been critical of the tax plan, even though he acknowledged it would be good for his company. He said in October, quote, "We have a lot of businesses. I don't think any of them are non-competitive in the world because of the corporate tax rate." So he wasn't really enthusiastic about cutting that corporate tax rate. Look who's here. Fox News contributor, Wall Street Journal kind of guy, James Freeman.
Yes, sir.
What do you make of Warren Buffett? So you're not exactly a big fan, are you?
Well, you know, maybe I'm getting to be more of a fan. I think you have to give him credit here for saying this tax cut is now a huge tailwind for American business. Now, it's a little odd since he didn't think much of it beforehand, but, you know, he seems to have seen the light a bit. And I also give him credit for acknowledging how big it was this year in their results. This was not really a great Berkshire kind of year in terms of the operating results, but obviously that tax cut resulted in roughly almost a doubling of their earnings from last year.
But he doesn't know what to do with it. He's got $116 billion. He wants to make a big acquisition, but nothing's cheap any longer. Well, I wonder if he'd give bonuses to his people. I mean, he's got hundreds of thousands of employees. $116 billion goes a long way to those employees. Or he could give it to the shareholders, maybe. You think he'll do either?
Well, I think he will try to give it to the shareholders. Certainly, that's the track record. And the track record is, despite how often he talks about the need to raise taxes on other people, he has been so successful in part because he is a great tax avoider. And I think he will figure out how to distribute income to shareholders without exposing it to taxes. Maybe more buying back stock, something of that nature. But I think it is interesting when he's sitting on this cash pile for what it says to the rest of us. He's saying stocks are too expensive. I think assets of all kinds are too expensive. And he's also, I think, implicitly saying that a lot of bonds are too expensive, because you look at where he's keeping that money, a lot of it is just very short-term Treasury bills. So he doesn't seem to have a whole lot of confidence in buying at these prices, whether it's corporate stock or government bonds, for example.
He's got so much money, doesn't know what to do with it. Could you put it like that?
Well, he also, it's funny, he has over the years paid so little in taxes given that huge cash pile. We learned earlier this year that at least in 2005, although he's much richer than Donald Trump, he paid a much lower income tax bill. So
because that's because he pays himself a relatively very, very small salary. His wealth is the accumulation of capital gains in his company, which is not taxed.
Exactly. And I think it's great for shareholders. Obviously, shareholders agree. I think that money is definitely more wisely spent, more efficiently allocated by Warren Buffett than by the federal government. But it is funny when you see his occasional sermons on raising taxes on everybody else. You just have to keep in mind that he'll probably figure out a way not to pay them.
You got it. James, thank you, sir. Appreciate you being with us.
Thanks, Stu.